What's going on, everybody? It's Jeff here. Welcome back to the channel. A bloody red Friday in the market. The SPY is now sitting at the 50-day moving average, which has acted as support for the entire year. Is it going to hold that 441 level, or is it going to break and go back down to the 100 moving average? We're going to take a deep look into that and what exactly happened today. We're also going to look at AMC. The market makers are really trying hard to keep that below that $45 level. We talked about this earlier in the week, talking about the options chain and the amount of calls that were set to expire in the money at that $45 level, as well as just a low volume this entire week. The shorts kind of let that price run up a little bit to that $52 range, and they just continued to hammer down, bringing that price down to $45. We do have about 30 minutes left toward market close. We might see if we're going to get a little run going into that. We're going to go over everything. Let's dive right into it. First off, let's take a look at the SPY again. Started to recover a little bit yesterday and didn't really hold. We're going to zoom in and take a look now as where we are sitting. Look at this. We've covered this so many times. You should be a professional at knowing exactly where we're sitting. That 50-day moving average will zoom in much closer. It did start to dip just a hair below this. Monday is going to be a good sign on where the SPY is going to go. Last time it broke through this, it didn't have just a little false breakout of a wick. If we get a solid close through this, the last time would bring it right back down to about that 431 level, which is also the 100 moving average. Now let's take a look at some of the news that exactly came out today. Americans are seeing the worst buying conditions in decades on high prices. U.S. consumer sentiment rose slightly in early September, but remained close to a near decade low, while buying conditions for household durables deteriorated to their worst since 1980 because of high prices. Take a look at this chart. Just absolutely horrible. And this is starting to build fear inside the market, especially because we are sitting at all-time highs. If you look, every single indice was down. The NASDAQ is just barely hanging on to that $15,000, which acts as a very psychological level for it. So we're going to take a close eye going through this. Now, we've talked about this numerous times on why I have gone much shorter in my positions. And it really is because of everything that is happening inside the market, not just with the government, the Congress, the Fed, the Delta variant, the big banks, the stimulus being trying to extend a fourth stimulus, the pulling of the unemployment benefits, the debt ceiling. I mean, the list just goes on, just bringing fear inside the market, and which makes me really, want to take the gains that I've had over the last year and a half and play some of these short plays. As you can see, we're going to keep a close eye on this and continue to just not hold many things over the weekend. I am insanely strong on AMC. My net cost on AMC is in the teens, so I am definitely okay with that. But let's take a look at some of the plays that we had today. I'll switch over to the 1-day minute chart and call some of these out that were absolutely phenomenal. There are two I really want to highlight. One was IPHA. It was a positive phase 2 results represented by AstraZeneca, which is another company. So if you're ever reading news and you think when a company represents their results themselves, it's always better when there is, a scientist, a researcher, or another, company that has some, credibility that gets to back their positive results. Always helps a little bit better. I did say that it has the keep your stops tight in case this does want to run all day. The next one was CRVS. Talking about this one ripping pre-market. I also did shout this out. I didn't have it in my notes that this could be one that was going to run all day. UPST, which has been a nonstop beast, had a JP Morgan tier 1 upgrade. This one was a phenomenal play for a few dollars. Love playing UPST and Moderna for the fact of their range into it. But let's take a look at those two plays really quickly. IPHA. Right out of the gate, I had said, what did I say? To add above 775, look for that 75 cent gain. This thing immediately came out, hesitated around that point of just about 930, 931, and immediately went all the way up to the upside. I think it halted twice, absolutely crushing on this play. Easy 50% gain. Could have purchased this one at 775, set your 10% loss stop limit, and trailed this all the way up. Absolutely phenomenal play. If you got caught in the halt, they immediately ripped out of it, which is a good one, bringing almost to the $12 level. I didn't think that was going to go to the $12 level. The reason why I didn't really run all day is because it ripped so hot out of the gate. So kind of remember that going forward. The next one we're going to talk about was CRVS. I said this one at 420, as you can see, it had the previous support around that 415 range. So once it got above this, I actually played this one and I got caught in this right here at about 9:46. I got caught. I purchased it up here and it immediately came all the way back down. I rode it back up, and as soon as I got slightly in the green, I got out of it. Some people continued to play this all day and really just rode this to the upside, making some great money on this play. Once I got burned out of it, I had a feeling it was going to continue to go, so I hung on to it. But once I got into the green, I wanted to get out of my position and not continue to play this anymore, because like I said, I purchased way up here and it immediately just flushed right down, and it was just a bad sentiment going forward. But those two plays absolutely crushed it for us. Now let's take a look at AMC as we are watching this right now. It is taking a charge for that $45 level. I want to take a look at this from a little bit bigger of a time frame, and then we're going to come back to this 1 minute, and as it's really approaching that $45, it's kind of cool. But as you can see right here, I have this same trend line going forward. It did break below that, but that's fine because it's been continuing to curl. Your next level of support is still acting at that 43.50 range. We get a clean break below that, then 40 is going to be our next barrier. If we stay above that 43.50, expect more upside to happen, a little bit of consolidation and more upside. Don't forget where we were for quite a while, hanging around that. I mean, we did pop up here to that, what was about that $46, $47 level, but we hung around that $30, $32 level to form a really strong base of support. And the reason being is because we ripped up so fast at the beginning. So look for that to happen around that $40 to $45 level for a little bit. The stronger support we can build, the more stable it is going to last. We were building some of that in the 60s right here, but like I said, it just ripped so much. We had that gap here in the 30s that had to come back down. We built that support again, and look for that to happen right here. Now I want to talk about why I mentioned that $45 level. And it was all because the options chain. Now, this is a monthly expiration, so maybe there was a lot of people that purchased a long time ago. But if you just look at some of these numbers, and this is open interest, these are contracts that are still open, that if you're looking at all of these 15,000 contracts at the $48 level expire, I mean, we got 25 minutes until the close. They're worth, pretty much nothing. 36,000, 24,000, 30,000, 15. I mean, the 87,000 on the 145, which could be different. This totally could be, hedge funds hiding their short positions, which is completely understandable and expected of why they're doing it, which is absolutely ridiculous. But I understand, seeing some of that volume in there, but the amount of money that is wasted on these option contracts that they just continue to hold until the end is absolutely ridiculous. If you look at some of these put contracts, it is even more, which, all right, fine. Look at that. $5, 17, 13, 18, 24, 27, 29. You got 12, 11, 15,000. There's nothing at the 45. They covered that. Look at that open interest right here. Remember that 25 minutes, everything, boom. They got that touch barely in the money. They exactly close out of that one. So we'll see exactly what's happening. In the next weeks, we don't have the 145 calls because, like I said, the price is a warrant and they're not the monthlies until we get into October. But we'll see where this one closes. Like I said, the direction hasn't changed. Before I zoom off of this, the direction hasn't changed. It's made that curl 1, 2, 3, 4 times, and it looks exactly like it's going to be doing it. It might be dragging out a little bit further. Today, there was a lot of volatility going on today, and just remember, the entire market is completely getting bashed. IWM, the Russell 2000, is getting bashed because of everything that is happening that we just covered. So watch for that curl. We're still in a range. Until we break out of that range, then we're going to have to find a new direction of exactly what is happening. And this is completely from a technical standpoint. Everything is still moving along as plays. The play still stands. So that's it for this video. I'm going to be knocking if this hits 45 by the time we close. So I'll see you in the next one.